So welcome back, friends. On account of the RBI increasing the weightage on many consumer loans, you have seen the banks and many NBFCs with high exposure to consumer loans. They get into a lot of trouble today. So we had many of these banks and NBFCs falling quite sharply today. Now, one of the institutions that could be impacted is Bajaj Finance. Now, Bajaj Finance's growth may be hit due to the RBI's increase in the risk weight on consumer credit exposure, and also due to another reason, and that is suspension of e-com and Insta EMI card. Okay, it has plunged only 2% to close at 7,219. However, the RBI's increasing the risk weight on the consumer credit exposure on non-banking financial corporations to 125% from 100% earlier is a move that could directly impact the Tier 1 capital of NBFCs, especially Bajaj Finance. 45% of the loan book of Bajaj Finance comprises unsecured retail exposure. Now that's quite a bit. Now a 230 basis points reduction can be therefore expected in the Tier 1 capital of Bajaj Finance, while about 190 bips impact could be there on the lender's capital adequacy ratio, or CAR as it is quite called. A lower CAR or capital adequacy ratio limits the growth, as you know, for the lending institutions, as they need to maintain capital to lend more, which is the requirement of the RBI. The inadequate capital hurts financial institutions' capacity to deal with unsecured or unexpected losses from bad loans. Okay. For that purpose, RBI requires a certain cushion. That cushion could get impacted, and that is not a very good thing. Now, Bajaj Finance will need to augment capital adequacy and raise funds. It has a smaller share of priority sector lending as compared to other vehicle finance companies such as Mahindra and Mahindra Finance and also Cholamandalam Finance. And this makes it more vulnerable due to higher capital adequacy requirements. Okay. Therefore, in order to maintain a healthy CAR with the central bank, Bajaj Finance would need to raise adequate capital to be able to grow its lending book. Growth could get curbed as a result. A fresh capital raised by NBFCs from the banks would increase their borrowing costs, as even the banks lending to NBFCs is going to get expensive owing to the RBI risk weight measures, which have been enhanced in yesterday's policy announcement. Bajaj Finance, for your information, has 32% of its funding from bank borrowing. So you can imagine how much its cost of raising money is going to increase. Hence, the fresh capital raise and the heavy priced loans may impact, of course, the margin of most of the asset financing NBFCs, as the cost of funds would ultimately inch up. Bajaj Finance has already witnessed an increase in the cost of funds in the July to September quarter that dented the net interest margins, or the NIMs as it is popularly called, of the consumer lender by 14 bips sequentially. Alongside a 14 bips quarter-on-quarter contraction in margins, the rising cost of funds may pressure the profits, challenging the company's ability to sustain robust earnings growth. NBFCs such as Bajaj Finance, as a result, would face higher costs due to expensive bank funding and higher capital requirements, and hence will need to pass on the higher lending rates to the consumer. Okay. So this apart, the RBI's ban on Bajaj Finance loan issuance under two products, e-com and Insta EMI card, is also expected to hinder the consumer lenders' ability to lend and grow. And valuation-wise, Bajaj Finance, as you know, is trading 34 times price-earnings ratio, much higher than the sector's average of 20 times the PE multiple. That the company needs to grow at a faster rate to justify its valuations, or it may face some correction in its market price going ahead. Bajaj Finance is already trading at expensive valuations when compared to its peers, and one can wonder if the growth will be possible in the coming quarters for the rest of the fiscal year 2023-24 and justify its valuations if Bajaj Finance does not grow at 30 to 35% compounded annual growth or CAGR in the fiscal year 24, then the valuations would not be sustainable. The altered risk weights coupled with margin contractions and increased cost of funds pose serious challenges for NBFCs such as Bajaj Finance. All in all, be careful. Many banks which heavy consumer credit exposure and NBFCs such as Bajaj Finance could be facing a lot of headwinds because of the RBI directives issued yesterday. Friends, to get to know more, which therefore will be the areas who will stand to gain from all this, please do join any of our groups. You can join the Diwali package, which gives you daily stock suggestions and also good direction of the market. And you can join that, or you can join Premium, which gives you 3 days view of the market. You can join Premium Value, which gives you 1 week view, and you can join Premium Plus, which gives you a 10 to 12 days view of the market, option calls, and good stock recommendations. Number to get in touch, 9820861044. Happy investing. Take care.